Is this democratized access to investment solutions going to expose mediocrity in the industry, and what will the ramifications of that be?
I think that's absolutely the case. I think that the advisors that are kind of doing it the old way are going to be out of business.
It has big implications across the industry.
Every channel, yeah.
Every channel.
Mediocrity.
Every channel. I'm convinced that in the next 10 or 15 years, you're going to see $1 trillion RIA. The notion of commission-based, product-focused salesmanship is going away and being replaced by fee-based, independent, objective advice. Right. Encompasses far more than just investment management to the broad array of personal finance topics. And the broker or advisor who's been in business for 20 or 30 or 40 years, whose value proposition historically has been, I can make more money for you than the other guy, I can charge you less than the other guy.
Or simply access to capital markets.
They're gone. They're absolutely gone. And because we can't make more money than the other guy, we all now have access to those products and those investment strategies. I can't do it for less than the other guy because nobody's less than the internet. So the notion that I'm going to win the business or keep the business based on price and performance is gone.
So the solution is better advice.
Yeah.
It's better advice, it's alignment, it takes more resources.
And so many of these advisors are going to say, in the face of this,
I'm not doing it.
I don't know how to get compensated for doing this. I can't get compensated as much as I was before, and I don't know how to give this advice. I don't want to go back to school to learn this, and they're just going to quit.
One of the trends we're studying very closely seems to be the concentration in the capture of organic growth in the industry, where when we look in terms of advisors who are winning new and retaining new business, every year it seems that fewer, presumably better advisory teams are taking the lion's share of net new growth. And a lot of the industry is completely atrophied and stagnant in terms of organic growth.
The challenge, though, is that many advisory practices were set up as little mom-and-pop shops, and they can handle 100 or 200 clients.
They can't scale.
That's it. Yeah. They don't want more clients because they don't have the scalability. They don't have the ability to onboard a whole lot of clients within their structures, which means the few firms that have the scale, the ability to add clients and assets, are going to do it. And that is going to continue, and you're going to see the biggest firms get ever bigger.
But why? It gets back to, I'm guessing, it gets back to you have a strategic plan, a mission, a vision, the resources, the people strategy, and it's a virtuous cycle.
What's the biggest challenge, and how do we solve it?
3, all simultaneous: regulation, competition, and technology. All 3 are radically altering the practice, the advisory environment, and making it vital for us to be far more professional than ever. And many are not going to be up to the task, but those who are, and you don't have to become it yourself, hire the teams to do it for you. If you can overcome that troika, you'll have an extraordinarily successful practice.
I think we hope that America in general gets better financial advice, and the problem is that the model we're talking about here is probably not financial advice for the masses. I think, to Rick's point, I think compensation really matters. Compensation structures. People, I would like to think that among the questions that all financial advisors ask of their clients, particularly since they're getting older and their clients are getting older, is to have an intergenerational conversation. Make sure you are talking with the children of the asset holders. So you really need to involve that next generation, or else you and the people who earn the money in the first place, will both fade away. And that money will, go out of the financial advice business.
That's a bit of great advice. I just read a study, and I'm sorry I can't cite it, but the majority of next generation's kids have no idea what the financial advisor of their parents does or who they even are. So that's kind of an issue.
What are you doing in your firm to solve for that multi-generational component?
We encourage our clients to bring their children with them into the meeting, or at least to designate a child as a key conduit. For our aging clients, we're demanding that they sign authorization allowing us to talk freely with
every client,
an adult child. Yeah, because a big issue is declining capacity of our clients who are aging.
Plus the other big issue, secular issue in the advisory business is the average age of an advisor with no succession plan and no way to interact with the next generation of wealth. So Fewer advisors, I think. I think those that have a strategy and know their market, are an expert at their client segment, and build out those services and hire the talent for the client to solve the client's problems, will get bigger and be more successful. And there'll be a lot of advisors that go by the wayside.